I can say to my new Samsung Galaxy S25 Ultra, hey, find a keto-friendly restaurant nearby and text it to Beth and Steve. And it does, without me lifting a finger. So I can get in more squats anywhere I can. 1, 2, 3.
Will that be cash or credit?
Credit. 4.
Galaxy S25 Ultra, the AI companion that does the heavy lifting so you can do you. Get yours at Samsung.com. Compatible with select apps. Requires Google Gemini account. Results may vary based on input. Check responses for accuracy.
Imagine what's possible when learning doesn't get in the way of life. At Capella University, our game-changing FlexPath learning format lets you set your own deadlines so you can learn at a time and pace that works for you. It's an education you can tailor to your schedule. That means you don't have to put your life on hold to pursue your professional goals. Instead, enjoy learning your way and earn your degree without missing a beat. A different future is closer than you think with Capella University. Learn more at capella.edu.
Hey traders, Akil here. Welcome back to the Trading Coach Podcast. In the last episode, I told you about the easiest investment that I ever made and walked you through my approach of common sense investing. Today, I want to follow up with that with a live example, meaning something that is actually happening now, and show you how you can use this common sense investment strategy to make investment ideas, both buying and selling. So, if you've been alive for the last few months, you've probably heard the word tariffs, and that has been the biggest threat that President Donald Trump has really given since before he was elected, but certainly once he took over in office. And there's a lot of different tariff threats out there, or I shouldn't say threats, a lot of different tariff ideas out there. Some of them will actually go through. Some of them are threats for negotiation. But specifically in this podcast episode, we are going to focus on the new tariff idea, the 25% tariff idea on automobiles, so foreign automobiles. And what Trump has recently said is that as soon as April 2nd, right, he will introduce in the area, right, it could be 25%, it could be around 25%, it could start off smaller and then increase over time. That way it gives companies time to adjust, although that's going to be hard because it's not too easy to take a car plant and just kind of move it back overseas to America. It takes years and lots of infrastructure. But the idea is that he is going to introduce tariffs in the area of 25% on cars as soon as April 2nd. Now, before we dig in deeper, what's important to know, because we talked about, is this real? Is this a threat? This is actually that he planned on something that he planned on doing back in when was his first term? 2018, 2019. And it didn't actually go through. So, take everything with a grain of salt. Some of these are negotiation tactics where it's like, hey, I'm going to put this tariff on you unless you lower the ones you have on us, and then we meet someplace in the middle. And just to go along with the automobile, there are other tariffs out there as well, but one specifically is going to be on semiconductors. And semiconductors are a key component to cars. And if you remember back in the COVID day or the pandemic time, it was the shortage of semiconductors after and during the pandemic that caused car prices to soar as, the products fell, and so supply is less, demand was high. You guys have seen the Supply and Demand podcast for Dummies, episode 1101 if you haven't, but that's how prices increase. When supply drops off and demand is higher, people are willing to pay more because there's more of a, there's more of a negotiation because there is less product, like they have to have it. So what are the reasons for these tariffs, right? Before we hop into like the investment idea. Well, the reason that I'm just saying what I think of what Trump is thinking, what I would assume Trump is thinking is that he believes that, we're being treated unfairly here in the U.S. He believes that there is unfair treatment on auto exports in foreign markets. And an example of that is this, like the EU, for example, they collect a 10% tariff on vehicle imports, which is like 4 times bigger than what the U.S. collects on passenger cars specifically. We do collect a bigger tariff on like SUVs and pickup trucks and stuff like that. But you can see the EU collects 10% on passenger cars. We only collect 2.5%. There's a little bit of a difference there. And his idea with the tariffs is to penalize automakers that have, that are creating making and building cars overseas because it's cheaper and then shipping it over here to America. And the idea is to kind of bring the jobs back to America and build everything here ourselves. And just to give a little bit of insight on that, to show you like how much of what we're producing actually is from overseas. These are numbers from 2024, I believe, right? The U.S. imported, right? So we took in $217 billion worth of passenger vehicles while exporting only $59 billion. So that is what? 1, 2, 3, 60, 120, 180, 240, not quite 4 times, 3 and something times the amount. So what would this all mean if these tariffs do go through? And again, I say a big if because there's so many different stories out there. Like one, for example, I heard was that, Trump said that the EU has already signaled that it would lower its tariffs on U.S. cars so that we don't implement this 25% one on them. But then EU lawmakers are saying, nah, that never happened. So again, take this all with a grain of salt. But as investors, what we want to do is we want to be prepared for any situation. That way we know the play before it's in play. We don't want to be the last in after everything has happened. We want to be in on the ground floor. And then when it happens, boom, we're in there for that initial takeoff. So what would this mean? Well, tariffs on cars, honestly, this would probably be seen as like a massive game changer in the auto industry because prices would get higher. Prices are already high, right? I don't think we're at all-time highs, but we're close to all-time highs right now. And this would make prices even higher for most automakers, including U.S. brands. And I say including U.S. brands because although many of our U.S. brands are made here in the U.S., and I'll kind of save a little bit of that later when we get to the investment portion of this, many of our U.S. cars and many of the parts for our U.S. cars are actually produced overseas, right? They're not actually American made. They are American cars, but not actually American made. Again, that just goes the whole thing about companies exporting stuff overseas. Mexico, for example, is a big place because it's just the labor is cheaper. It's cheaper to produce a product than to ship it back to the U.S. And again, just going back to the effect that like supply and demand goes, right? Supply and demand for dummies, right? If these tariffs go into play, prices of cars are going to go up. If prices of cars are going to go up, well, 2 things are going to happen. The most likely thing is that less cars are going to be shipped over to the US because it's costing more money to do so. If less cars are shipped over to the US, that means the supply of cars are going to go down, right? If the supply of cars are going to go down and the same demand for cars is there, it just means that the prices of cars are going to get higher and higher and higher. And if prices get higher and higher and higher, similar to the pandemic, this is going to price out many of the buyers for cars, which would actually equal more demand for used vehicles. And it's just a cycle that hurts everyone because then used vehicle prices would go up as people start buying more used vehicles and that supply lessens. And, again, it goes around and around and around. So what are the investment ideas for this? Using common sense, right? We said that car producers overseas, it's going to cost them more money to ship cars over here. They may ship less cars over here, right? Either way, they're losing money. If they ship less cars over here, they're probably not going to sell as much. If they ship cars, the same amount of cars over here, it's going to cost them more because of those tariffs to do so. Either way, it is hurtful for the company. I would say, even if they give in and say, hey, we're going to close down our shops and move back to the U.S., it's going to cost them a lot of money to, again, build out the whole auto plant and that whole thing, right? So what I would be looking for in the market is 2 things. One, if I'm someone that wants to short, I'm not personally a short investor. I only get long. But if you're someone that wanted to short, I would start jotting down a list of all of the car makers that are produced overseas, and then kind of dial down that list to the ones that ship to America the most. I haven't done that work for you. You got to do that in your own right. But that's one idea if you're looking to short. So if you're looking to go against the company, find the automobile makers, find the ones that ship over to the US because those are the ones that are most likely to be hurt by this. If you're looking to get long and invest, right, then you want to do the exact opposite, right? You want to look for the automobile makers that are made here in the US, because if they're made here in the US, they won't necessarily have to, again, aside from like different parts and stuff like that, because there are other tariffs that are going on aluminum, steel, and semiconductors. But as far as the auto tax or the auto tariff, right, they're not going to have to pay that, which means they won't have to cut supply. They won't have to raise prices. And if every other car's price is going up and your price is staying the same, what are buyers most likely to buy? Well, if the higher prices are now out of reach, they're going to go for something that they can afford, and bada boom, bada bing, it happens to be your car. So it should be beneficial to those companies. So a few that are created in the US, or that are mostly created in the US, are these, right? The first one you're going to get a chuckle out of. Tesla. Right? Now I'm not jumping to any conclusions about the relationship between Donald Trump and Elon Musk, and if this whole thing is to create more more demand for Tesla. I'm not saying that, but one could wonder. But Tesla is 100% American, right? Apple pie, eagles, flags, America, right? Rocky Mountains, right? Tesla is 100% American. And it's no surprise that when this announcement came out, its stock jumped 2.2% immediately. So that's one. A few others are Jeep, are Cadillac, and Dodge. All three of those, I believe, are 80% produced in America. So those would be three stocks to take a look at. So before we go, just a little bit of information on how to find or dig more into these if you are interested. Tesla is pretty easy to find. That's probably the most common out of them. Cadillac as well. Cadillac is owned by GM, so General Motors, so that's a pretty common stock. The other two, Dodge and Jeep, are a little bit interesting because they have parent companies that also have grandparent companies that also have even more grandparent companies. So for example, like Jeep was previously owned by Chrysler for a long time, and then like Fiat bought Chrysler and made their own thing called, I think, Fiat Chrysler or something like that. These guys eventually merged with another group that owns like Alfa Romeo and Ram and I think Maserati, called Stellantis. So if you want to look at both Dodge and Jeep, those are going to be under the Stellantis ticker, not like a Dodge ticker or a Jeep ticker. So thanks to the internet, it's easy to kind of find these things. You just got to do kind of your deep dives. But over the years, many have been bought and sold and merged and whatnot. But check out those three stocks. And again, along with the other automakers, if you're looking for shorts, obviously this is not investment advice or anything like that, but it's a good chance to practice your common sense investing, right? Again, these tariffs, if they go through, will not go through until April, but I'm sure we're going to hear more murmurs and more rumors of whatnot, and we're going to see traders and investors start to position themselves one way or the other. So I'm not saying go in and invest in any of them, but it's certainly something to keep an eye on for that cause and effect. And if you can practice on this, it's just going to give you more confidence for the future. Hope you enjoyed the show. Hey, if you like what you see here, give it a like, leave it a rating and a review. Check out the YouTube channel as well. Lots of cool videos on there. And of course, if you're interested in learning how to trade, check us out, www.tier1trading.com. I will see you next time. Until then, plan your trade, trade your plan. Take care.